Hey guys, how are you doing? I'm back with a new video, and actually this is the first video of a new series I want to do, where I analyze companies that you mention in the comments, or that you ask for in basically doing a very superficial and unscripted analysis, just to have an idea of whether or not this could be a good or not investment. Obviously, do your own research, and this is not investment advice. Um, and in this case, one of you asked for Recursion Pharmaceuticals, no? Um, and I think, when you mention a company that I think it's worth doing a deep dive on, I will probably do it. In this case, I think with a quick analysis, we can get to a conclusion, which is negative. But in any case, I mean, if you think otherwise, this is only my opinion. So, let me know in the comments. And if I miss something, happy to reconsider and do a more in-depth analysis of the company. Anyways, to look into the company, we'll look at some different documents and resources. So first of all, we'll look at mainly the 10K, which is the official document they have to fill every quarter with the SEC. We'll also maybe look at the one pager they shared, and then also take a quick look at the earnings presentation, which is basically the investors presentation they also do each quarter, and it's more marketing material usually than the 10K, which has the more accurate information. We'll also look at the historical financial data using stockanalysis.com, which is a free service that I used a lot, and I recommend. They do not sponsor me. I just think it's good value. And if you want to pay to have like longer timeline for data, I think it's also worth subscription. And then finally, we'll also look at the transcript from the last earnings call in FinTool, which is another tool that I also consider useful because it's very easy to find all the transcripts for each company, as you can see. And this is basically what they discussed in the last earnings call. Okay, so first of all, no, Recursion Pharmaceuticals, take a bit of the history of the company. It's what they call a tech bio company, which I think was a term that was used in 5 years ago to basically say that we're going to use AI to improve drug discovery overall, no? We're going to find better targets, we're going to find new targets by using AI, and this will allow us to be better than, I don't know, whatever is on the market. The problem here is that the big part of the drug of bringing a drug to market, it's not the drug discovery part, it's the clinical trials, no? So where pharma companies spend a lot of money, it's passing each drug through all the phases, like the three different phases of clinical trial: phase 1, phase 2, and phase 3. And you first want to show that it's safe, then that you want to show efficacy, no? But just finding the targets, it's not as valuable. It's not as big of a market, no? So in reality, either you're a pharma company and you're going to invest huge amount of money in clinically validating these assets, or you are an R&D subcontractor of pharma companies, which basically does R&D work for them, trying to find new targets. But this is not a big market, and you're a service business, and it's very also unclear whether AI gives you an edge there, no? And this is more or less what people realize with Recursion Pharmaceuticals, no? Because as you can see, when they IPO'd, they peaked at $40 per share. Now they're at $4 per share. So now currently at a 2 billion market valuation. But at some point they were worth 20 billion, which it's crazy, no? Then if we look at the revenues, as you can see, now last year they did 60 million, and in the last 12 months they did 44 million in revenues, which is not a lot considering how much money they are spending to keep the company going, as we will see, and also not a lot compared to the market cap, because they're still worth 2 billion, no? And right now, if we want to take a look how much they are spending to keep the company going, so more or less they're spending 400 million per year to keep the company going. and they are making 60 million of revenue, which is, yeah, not good. Then let's take a look at the balance sheet also really quickly. So their net cash, actually let me shift this and then show it quarterly so we have the latest figure. So this is Q3 2025. Their net cash, which is all their cash minus the debt, it's 577 million, which is quite high. And you could ask me, how come they have a lot of cash if their revenue is so low? And it's basically because they've been issuing shares non-stop since they IPO'd, no? Diluting existing shareholders, and that's why the stock price went also down substantially. As you can see, when they IPO'd, they had 22 million in outstanding shares. Now they have 500 million, which means that they diluted existing investors at that point by a factor of 20x, which is crazy, to be honest. And that's why the stock also, went to shit. And if you want to see exactly how much money they raised from this, you can go to the cash flow statement, and there should be issuance of common stock. So yeah, this is the amount of money that basically they are getting from selling more shares at the open market, no? So this is it, no? It's a company that it's more or less spending 400 million per year to keep the lights on. Revenue is very low, and as we will see, revenue does not mean cash coming into the company the way they are recognizing it. So the question is, do they have something that will materially improve significantly revenue in the next 2 years? Otherwise, this company is in a downward spiral, no? Because at some point, investors will, they're already fed up, no, with all this diluting. Let's take a quick look at the presentation, and then we'll take a look at the official documents, no? But some changes at the top in terms of CEO and so on. This is meaningless, and then this is interesting, no? So they say they have 400 million in cash. This is different from what we saw because they are not subtracting debt from here, and they also raised, they diluted after the reporting period, no? So between September 30th and, as you can see in the footnote, October 9th, they issued about 120 million more in additional stock, diluting investors even more, and therefore, increasing the total cash pile that they have. They mentioned they have this 30 million milestone payment for this whole genome neuromap, which is basically R&D work for pharma companies. And this 30 million, to put it into perspective, it's less than 1 month of runway for this company, so it's not very significant. And they say that they have 450 million in potential R&D work. This is all marketing, but if you're interested, you can look into it. And then this is the pipeline, which is where we should look into. And we look at it in the official documents because it's more accurate. They explain a little bit of the pipeline here. And then, yeah, so cash runway, as I said, this is the amount of cash without subtracting debt. They must have 100 million in debt or something, I guess, at the end of September, and then 120 million more 1 week later, unaudited, because they raised even more cash. This is the 30 million milestone. 100 million partnership inflows feels by year end 26, so next year. So yeah, it doesn't matter a lot. And then they want to reduce the burn, which was already higher than 400 million in 25 to 400 million in 26, which is still super significant compared to any kind of revenue that they have. Anyways, let's look at the official documents, no? And here there are basically, this company has two sources of revenue. One is these partnerships that they have with bigger pharma companies, and it seems like they're doing basically R&D work, so like working as a subcontractor for the pharma companies, get paid for it, which it's okay, but it's not super interesting and it's not super substantial. And then the other potential, because it hasn't happened yet, source of revenue, it's any of their current assets getting to market, no? And this is what we saw in the presentation, but here you have more detailed data for each one of the assets. And I already looked a lot at all of them. This is the one. This is the one with the only one with clinical data. The other ones are still preclinical, so they are not worth a lot. And even the most advanced one, which is the CDK7 inhibitor, it's still in phase 1/2 trial. They have some clinical data for it, but I would say this won't get to market before 2031, 2032, probably, more or less. So 7 years. So in 7 years, if all goes well, this will generate revenue, but this is being very optimistic, no? Because they have to probably do 2 more trials to get to market. This will take a lot of time and money, even more money, and yeah, chances it's not happening, no? So, and then you can look also at the potential revenue from these partnerships, but yeah, they don't give a lot of guidance on whether any of these will materialize or how much of it will materialize. So I don't think it will be super meaningful. So the question is what happens now if this company is running cash again in 2 years, they won't have any cash coming in the next 6 to 7 years, meaningful cash. Maybe some of these will materialize, but they're still spending 400 million. I mean, some of the partnerships maybe will materialize. They will do some more R&D work and so on. So they will have to dilute again investors in the next 2 years and raise more money at the market. And it's the only way. And even then, like I think they are in a downward spiral that I don't know how they can get that out of. No, maybe after diluting investors even more, I don't know, the price per share goes below $1 and they get delisted, or I really don't see how they get out of this, to be honest. And then another thing is that if we look at how they are disclosing revenue, so you can look at this part, no? So also how they recognize revenue from the partnerships, it's a bit confusing, but you can find it here. But the most important point for me is that this year they made 39 million in revenue so far, no, in the last 9 months. And what they are saying here is that of the revenue recognized during the 3 and 9 months ended September 30th, 4.5 and 36.6 million was included and earned revenue balance as of December 31st, 2024. What basically this means is that out of the 39 million that they reported in revenue so far this year, 36.6, so practically all of it, was already unearned revenue. So basically it means that the cash, there was no cash coming in from this revenue, that the cash was already received in prior years, and that it's basically they're recognizing that revenue now because they're doing the work related to that cash infusion that they received. No? So for example, they received a milestone payment of 100 million 2 years ago, and this upfront payment included like 3 years of work. So they are recognizing now that one of the second or 3 years of work for that upfront payment, no? And the consequent costs, but the cash was already spent years ago or last year, no? So it's a bit confusing whether or not they're actually getting more milestones and how much of that will materialize, no? Because if we look at the balance of unearned revenue, it's decreasing versus last year, no? So it doesn't seem like they are receiving more milestones or a lot of more money in milestones, no? And then finally, if we look at the transcript, this was interesting because usually when you have an earnings call, you have someone moderating the call, the analysts from the different investment firms covering the stock connect and ask the questions directly to management. But in this case, it seems like no one was moderating, and basically management was reading the questions that they received written down out loud and answering by themselves. No, but it was a bit weird. And there was this guy from Morgan Stanley, no, that basically asked what we were discussing. No, what are the expectations in terms of runway, additional financing? Do they plan to raise more ATM financing, which means issuing more stock and diluting shareholders even more? No, and the CFO gives a very long answer. That it's answering nothing basically, no, and what they're saying is we wanted people to be really able to be focused on the fundamentals rather than those events and needing to worry about another round of financing, no. So he's not answering because he knows they will have to raise more money. That's my guess. Anyways, summary of everything is this company has no significant sources of revenue in the next 5 years, 7 years. If everything goes well, they are burning 400 million of money per year, so that gives them, given the current cash, not even 2 years of runway, which means that they will have to raise more money by issuing more stock and diluting even more investors. So this company is very far from returning any dollar to investors, and they will keep taking from them in the coming years. So I do not recommend it as an investment. Obviously, do your own work. This is not investment advice, but yeah, I don't think it's a good opportunity. And that's it. I hope this was useful. It was a bit chaotic because it's unscripted, but I think it's the best way to deal with this kind of requests for now. Also, without spending, too much time into each one. Let me know any additional questions or things that I missed in the comments, and thanks a lot.